Hi everyone, as CRO has been moving to the upside recently, I got a lot of DMs asking for an Elliott Wave analysis on CRO. So here we are. Now in this video, I am going to cover different time frames, but I will keep things incredibly easy because when we look at a bullish scenario, we actually don't even need to look at any of this here. The only structure that we need to focus on is the most recent move to the upside from this low here at about 0.07. Because what the bulls want to see is continuation. You have a move to the upside here with a double 1-2 followed then by a wave 3, highest amount of volume, preferably in a wave 3, which means that bulls like to see continuation to the upside in at least a couple of wave 4s and wave 5s. Now you can see that on my chart I have a double 1-2 here, so 1-2, 1-2, you look for a wave 3 and then a 4-5, 4-5 at a later stage. I don't count this as a wave 1, 2, 3, 4, and this is wave 5. First of all, wave 5 on the highest amount of volume is a lot less common. And second, counting this as a wave 4 with this as a wave 2 doesn't really make too much sense to me, as the wave 4 would be very short in time compared to wave 2. So therefore, preferably, when we look at this structure from an Elliott wave point of view, highest volume in the recent move, we would like to count this as at least a double 1-2, looking for at least a couple of wave 4s and wave 5s. Now, alternatively, bulls might look for one more additional wave 1 and 2. So create another 5-wave structure, another one, get another retracement in a wave 2, and then look for continuation. But by all means, the invalidation is going to be changing structure. You don't want price to move below 0.1356. Initially though, one would look for a couple of wave 4s and wave 5s, which means create a few more highs on a decreasing amount of volume. The moment you see that, one can expect a bit of a reversal to come. This then gives you a very typical impulsive structure. So you have a bunch of 1-2s, you get your wave 3, you get a bunch of wave 4s and wave 5s on decreasing volume into resistance, and then you like price to turn around and create a retracement. Then the bearish scenario, if I zoom out, we would count this move to the downside potentially as an impulsive structure to the downside here. So 1-2, 1-2, 3, 4, 5, 4, 5. I gotta say that generally I avoid counting the initial structure to the downside. So a new coin or whatever launches and then price goes down, down, down. Generally, it's just not interesting to look at this. I usually start analyzing from the low and only look at the price action on the right side. However, in a bearish scenario, you would quite simply, of course, look for new lows to come, and then you look for a move down, retracement, and continuation, where this move up then has to be a zigzag family structure due to the subwaves that we see over here. So you're either looking for a wave A, B, and a wave C towards the upside, and then a retracement, or you're looking for a W, X, and then a wave Y towards the upside. But it's going to be a zigzag family structure. Now that makes things very easy. Because if you're looking for a zigzag family structure to the upside, then guess what? You want to end with an impulsive structure. And that impulsive structure would then be this move to the upside. So it's very similar to the bullish scenario. Because in the bearish scenario, an impulsive structure is preferably also then a double 1-2, you get your wave 3, and then a double 4-5. But then instead of a retracement for the bulls and continuation, you just look for continuation to the downside, right? And you're going to create new lows. So the relatively short-term price action might be quite similar. The bulls, however, after creating a couple of 4-5s, are looking for a corrective structure, corrective retracement to the downside, a 3-wave move, and then continuation to the upside. While the bearish scenario requires price to create a 5-wave move down, 3-wave retracement, and then you look for continuation to the downside. Of course, you then want to change the structure as well. So therefore, your bearish and your bullish scenario in the relatively short term are actually quite similar in what you'd expect. You would at least look in the bearish scenario for one more 4-5 preferably, because if you do count a W, X, Y here, and this would be your W, and then A, B, C, this is a flat structure in a wave X, and you're counting this as a wave Y to the upside, which then has to be a wave A, B, and this is your wave C towards the upside. Wave C internally is then a 1, 2. You look for a 3, 4, and a 5, preferably still at least one more higher high on a lower amount of volume before then retracing towards the downside. So you don't create 4, 5, 4, 5, 4, 5, but just 4, 5, hit resistance, retrace. That is, of course, your most bearish outcome at that moment. It would be very bad if this is the high and you just retrace and change structure. That would not be by any means bullish. Now, on the 1 hour time frame, we do have some local support. So here you can see the move towards the upside. And if we then have a look at the first area of support, it's always going to be your first range. So you can see it's also an order block here on the 4 hour time frame. Price moves up, creates a red candle, continues to the upside. This is structural support, which is always interesting, and you generally do expect a reaction there. And inside that area, if we pull a volume profile on a 15-minute time frame to get a bit more detail, then you can see that the point of control is sitting at 0.2675. And the value area low here is at 0.2592, and the value area high basically at the high of the box here at 0.2792. So this area in general would be a nice first area of support. But if one is looking for wave 4s and wave 5s, then just mind you that a retracement for a wave 4 can go as deep as a 0.5 Fibonacci. Now, if this was over here the most recent wave 2 in the bullish scenario, right, that would be your most recent wave 2, and you would look for a wave 4, so you have your 1, your 2, you look for your 3 and 4 and 5, so a wave 4 that is matching this wave 2, then you take a Fibonacci from the low to the high, toggle on the wave 4 targets, 236 to the 0.5. You can see the 382, which is a common target, is nicely aligned with the order block and close to the range point of control as well. We've already moved into the 0.236, which would be a first target for a wave 4, which was shortly respected here with a little bit of a bounce. And your invalidation basically for a wave 4 at least would be moving to the 0.618 at 0.2030. And then it invalidates a wave 4 that would work with this being a wave 2. So if we then look at the probabilities from an Elliott wave point of view and also the levels, let me start with the levels just to make sure that I complete everything before the probabilities. But these are the volume levels here. So to the upside, we have now hit a monthly order block. So this range here was an order block on the monthly. You can see there's nothing here. This is basically like a gap. And price just moved towards the upside, touched the next range, which works as an order block. But also here, this range volume profile sitting at 0.4054. So that is interesting resistance to the upside. And to the downside, we have our areas of support. And these are only weekly or monthly levels, not the daily levels like the local levels, which is the reason why I showed you some local support and how I find it, right? The order block and the volume profile to see the volume level. And then we have a time frame horizontal levels. We have resistance to the upside here as well, the monthly and 2 weeklies, and then to the downside, the areas of support. And then we get to the probabilities. And in general, what we're looking for locally here, preferably in both a bullish and bearish scenario, even though in the bearish scenario, you might only create 1 more 4 or 5 and then you're finished. Touching that range point of control would be neat. But in a nutshell, you're looking for some wave 4s and wave 5s. Keep things very, very easy. No need to look into all of the structures over here, really, because if you just look at the chart from a bullish perspective, you want to see continuation in wave 4s and wave 5s, or price just continues in a much larger wave 3. So as price is moving up, if we're looking for wave 4s and wave 5s, we want to see price moving up while volume is declining. If price is going to move up and volume is going to increase as price is moving up, we are quite likely still looking for a larger wave 3 towards the upside. Now, in a bearish case, you would count some WXY in here or a zigzag structure in here, but the conclusion locally is relatively similar. The price action that you're looking for looks a lot like what you might expect in a bullish scenario. Sure, in a bearish scenario, you might only have 1 4 5 or 2 4 5s, and but in the end, after a bigger push to the upside, if this is going to be your 3 and that's the end of 3, you you would expect a couple of 4-5s on lower volume for the bulls, and for the bears at least 1 4-5. So keep an eye on the areas of resistance that we have towards the upside. Keep an eye on the structures and how many 4-5s are forming, and if price continues up on increasing volume, we can definitely expect higher prices to follow. So yeah, that being said, hopefully this analysis on CRO was helpful and valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the altcoin analysis playlist, where you can find many more altcoin videos. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.